Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with soon to be on Bob Iacchino. How is everyone doing? Good afternoon, Davey. Hey, hey, waka waka. Crazy market. I think double bottom in Nasdaq from the look of it on multiple time slots. Can even see double tops in SQQQ, but not liking the daily. I didn't think the daily looked that bad. Again, we might not be at the final bottom, but we're at a potentially short-term bottom. And by final bottom, I don't mean the absolute bottom. I mean even we could be retesting this area next week, even with options expiration. But we will talk about that. By the way, if you are new here, please do consider subscribing, ringing the bell, and hitting that like button. Longer term viewers, please leave some comments and like the videos. Before I bring on Bob, let's just get through some house cleaning stuff. Remember, tomorrow morning, Michigan consumer sentiment at 9 a.m. That's going to be the big thing. It's going to be interesting to see the export and import prices, though. It's coming out at 7:30. And then we have cash and carry speaking. Fed's cash and carry. So pretty much mixed market today. Still Apple taking a hammering and Microsoft, Google down slightly, Amazon up, Tesla off a bit. So the mega caps were mixed. Healthcare was pretty decent today. Financials took a little of a beating. Oil was mixed. So FOMC still actually the 75% potential rate hike basis rate hike has actually slipped down to 6.7. And just for the point of completeness, still in very negative gamma. We had that big back and forth price action today. After the close a firm, I'm going to check in just to see their results, but that's all I was really going to be glancing at. Big time. Not a lot of market moving stuff that will really impact the NASDAQ. And tomorrow morning, just it's a very light earnings day, so nothing big on that front. But want to check all the boxes. Now that I've checked all the boxes, I will hit the magic Bob button and bring Bob on. Let's see, but Bob, I got to say hi to Sashi. He said good afternoon to you also. Are we there? Short-term bottom. I'm waiting for a trigger, but it's looking like we could at least put in a potential little mini pot pattern. On daily, we have a break of the neckline, head and shoulder, so I could see a retest of neckline as confirmation. On the daily, we have a break of neckline. On what market? Yeah, you mean a soft bottom. We don't know if we have a hard bottom yet. Bob's shaking his head with no hard bottom. Just a
No,
soft bottom?
no. And I don't really know what a soft bottom or a hard bottom means. Didn't we talk about this?
Do you
I
know
don't know.
what about the fat bottom? What about fat bottom girls?
I love that song.
The Queen throwback right there.
The Queen throwback.
So the bottom today was pampered, massaged to perfection for a bounce up. Powell repeats 50 basis point hikes in next two meetings appropriate. Is he speaking again? Is he talking again?
I didn't see him on the schedule to speak, so I don't know where that comes from. I'm not saying he didn't say that. It sounds like him. It certainly sounds like him.
Hey ho, Mike and Bob. Good to have you again. Fake rally today. We will see, but yeah, we don't have a great daily bottoming pattern, but you do have like a little 1 hour. It is valid still on the S&P this 1 hour, but it's not triggered yet. It's not triggered yet. Keep that in mind, so you can't go all nuts with this. What are your thoughts on today's price action, Bob?
Well, it's interesting when you get down to these levels. I have a significant level that I was looking at before we went on here. Well, it's actually more trying to fine tune it, but it's kind of like right around 3846 or so in the S&P. That's really it was significant. It's around January 20th and March 4th of all of 2021 is where I'm getting the levels for, and then we bounced off it March 24th of 2021, somewhere approximately there. And if you look at today's low, 38.55 was the low, and I've got the significant level somewhere around 38.46. So, yeah, massaged to perfection. Sure, I'll agree with that. Um, Soft bottom, hard bottom. I don't know. I mean, when I look at the S&P, I think it has to go into bear market territory. I really do. Um, I think at this point, it's down 18.39% as of today's close from
But
the all-time high.
Bob, we entered bear market by a tick.
We entered it, correct.
By a tick.
Yeah, by a
And
tick. I saw that. I saw that. If you go off the low on the futures, it gets 19.83%. But on the cash, we entered it by a tick.
one tick.
Yeah. Um, Bear market territory, the one thing I think these guys get wrong, and they get it wrong on financial news all the time, drives me insane, especially on CNBC, is they'll go into bear market territory and out. Stop. We didn't get a bear market. Again,
Yes, we one tick.
The things that I've said in my last 3 TV appearances is you don't have to be scared of a bear market because all it is something with a definition. That's all it is. It's 90 degrees or it's 95 degrees. It's a very simple thing. You just look at the thermometer, it's 90 or 95 degrees. And you could make money. I'm going to retweet my, actually the guy sent it to me because he really liked it. I'm going to retweet as soon as I get it, my TD Ameritrade hit from this afternoon where I talked about this. And I said, you can make money if you're a long only trader during bear markets. You can. And especially when you get down to levels like this where everybody that reaches out to me that's not a professional trader says, I feel like it's oversold. Me too. I feel like it's oversold as well. But I also feel like it can stay oversold for a long, long time. And we all know that. If you've been following Mike for any length of time, you know that. Things can stay overbought and oversold. I would argue that the market was overbought from probably about November of last year through the highs. I would say it's over. How am I? I'm looking at your indicator at the bottom. Is it the RSI, Mike?
It's
up above the purple. What's the purple there?
That's an RSI.
All right. So according to that, it was oversold forever. I was just saying since about November. So markets can stay oversold. They can stay overbought. We know that. If you look at Mike's RSI, we've only literally entered oversold territory. It looks like once.
We entered it way back in COVID. We've had dips that touch it, and this is normally an area we watch for at least a short-term bounce.
Right. But during the pandemic.
Yeah.
So I'm going to rant a little bit here, guys.
About
a couple of things. So number one, bear markets, all it is a definition. Okay. All it means to me is I'd rather sell a rally than buy a dip, but it doesn't mean I won't buy a dip. If I get a double bottom or some sort of high probability pattern, I'll buy that dip. In bear markets, I tend to go to the 75% target, not the 100% target, generally. Doesn't test out that way, but that's just something that I do, right? It actually doesn't test out well. It's only about a 1 or a 2% drop in the total probabilities of the full target from my manual testing. But I do it anyway. It's just something that I psychologically like doing because I would rather be short. It's just something that has a definition. Inflation has a definition, right? And we can sort of massage that definition by what the Fed has as their inflation target, okay? Inflation target is an adjusted average of 2%. Now, let's just say that, since I don't know what an adjusted average is, let's just say that that means somewhere between 2 and 3%, okay? We've never had inflation drop by 2.5% or more and not had a recession. It's never happened, going back to 1946. Maybe it's happened before that. I can't find any records. So when you think about it from that perspective, you can say there's at least a very high probability, if not an absolute fucking guarantee, that there's going to be a recession coming, because we can't stay at 8.3% year over year inflation. We can't stay there. It's got to go lower, right? So you can't predict an inflation now because, you can't predict recession now because it hasn't dropped by 2.5%. So I had an argument with Anne-Marie Hordern, which if you ever watch Bloomberg News, she is the ridiculously smart international political reporter on Bloomberg. And she said today, and by the way, she's very nonpartisan. which I really like about her. She pushes, when she does interviews with politicians, she pushes both Republicans and Democrats. When they try to avoid a question, she asks the question again. She's really awesome. I'm trying to get her on the podcast. So the request has been sent to Bloomberg's PR people to see if we're approved. But anyway, she said today the Democrats are not doing a good job of saying the inflation was caused by a once in a lifetime pandemic. And that drove me nuts when I heard that statement. So I reached out to her. I said, I'm a fan of your work, but that is completely incorrect. And she said, you don't think the core cause of the inflation is the pandemic? And I said, absolutely not. What happened to crude oil prices during the pandemic, Mike? They went negative. How is that inflation? It's the resulting actions that were taken to flatten the curve. I don't know, whatever. It's started by Trump, continued by Biden, so not a political statement. Inflation was and is and always will be a monetary phenomenon when there is too much money chasing too few goods. So as we came out of the pandemic, people were given stimulus checks. I'm glad for that. I got one. Then I never got any others after that. Actually, my wife got them. She got 2 of the 3. And those checks were given and they were spent in fewer and fewer places because businesses had closed during the pandemic after the shutdown. Supply chains got gummed up. It was still a monetary phenomenon. If the long, slow, painful recession that would have resulted from the pandemic would have just been allowed to happen, I posit that I wanted to use that word posit my whole life when I was thinking if that's the right time to use it. I posit that we would not have 8.3% year over year inflation right now. So, having said that, is today a soft bottom? Probably. It's probably not the bottom. I've been talking for the last 3 or 4 of these live streams that I've been on that I think we're headed for a medium-term bottom. And I think we decided that rally was going to be somewhere in the range of 20 to 25%, Mike, based on my theory, not on yours, just based on the measurements that you did with me. And then there's likely to be a new low off of that, given what I think is going to happen. I think we should believe the Fed that they're going to be aggressive, but I think we should also believe that we live in a time where everything is political. So once everybody starts hurting so badly, rates are higher, they can't buy houses. It's a good time for that chart, Mike. They can't buy houses and people are suffering, they will then lower rates again. Now, this chart shows.
Hold on. It's too big.
Yeah.
Well, you don't want my. There.
I subscribe to Bloomberg to their monthly news thing, but I couldn't find this anywhere. So I actually took a picture with my cell phone of the screen and I sent it to Mike. This is basically a chart showing higher rates versus new home sales. Okay. If you look, the housing market crash had a gap, and I can't really point to it on the screen, but if you slowly go to the left, I'll show you where I'm talking about, Mike. Keep going. Wait, is that it? What year does that look like to you?
Well, we had where in here.
Yeah. So that's prior. Yeah, right where your arrow is now. That's prior to the housing market crash.
Mm-hmm.
Okay, in the Great Recession of 2008, 2009. If you go to where we are now, it's a wider gap than then, right? Between the white line and the blue line. And for those of you who follow Mike for a long time, there's a double top on new home sales there. It's a little bit of a flat area there, so we might not reach the targets, but you can actually do patterns on things like this as well. They work. Right now, the rates are screaming towards the number of new home sales, and the number of new home sales is likely to fall. But I also posit that because of the shortage of supplies of new homes, we won't have a housing market crash. So I think that the recession is going to be sharp, but short. Okay? And I think it's going to be sharp because of inflation. There's going to be a very short period of people suffering really badly We're starting to see job losses. And none of this falls into place with the Fed reducing inflation. Um, that's my rant. So I think we're going to have a short, sharp recession very soon. I think we're going to come out of it because of political cowardice by the Fed. They know they're going to have to stop hiking rates. And then they're going to try again if the economy strengthens to get it under control. We could get 10.5%, 11% inflation a year from now. It could happen simply because the Fed is going to have to back off of what they're doing when this gets too ugly. And it's not too ugly yet. So that's why I don't think this is a hard bottom. That's why I think it's a medium-term bottom that's starting to form. We don't have a bottoming pattern by any stretch yet, but they're not going to have the political courage to do it. And inflation is going to continue to rise. It's absolutely going to crush assets because then they're going to have to come out after it even harder the second time around. So that's what the week has meant to me.
All right, live stream over, everyone.
You asked what I thought.
By the way, hold on, I got to give a shout out to
Lauren.
Lauren.
I'm very excited because I think we're going to see Doctor Strange this weekend. So I got my Marvel shirt on.
Well, I'm not going to see Pink Floyd.
I'm going to try and help Disney's stock price. Hippo character with a pink hat. I wish I could see these things.
I know. I want them to fix this so we can see the super sticker. Thank you, Lauren. Where else? I'm so far behind.
Lauren, do you have a question or a comment or anything? He said
Lauren,
sharp and short is right.
When do people lose confidence in the Fed when they dump rates to zero yet again?
What's that?
When do people lose all confidence in the Fed? When they, when they dump rates to zero yet again? I mean...
So NASCAR, I think, by the way, NASCAR, you're the guy who was talking about IPOs, right? I shouldn't say this, but I used to do some white label work for one of these services, just some analysis here and there for one of these services that try and push penny stocks and pre-IPO stuff. And in this particular downturn, I'm still on their support email list. They don't know I am. I haven't done work for them in 2.5, 3 years. But I'm still on their support list. And one of their recommendations, I don't remember the symbol. I guess I could look for it. I don't want to say the symbol because I don't want to be kicked off their support email, but I'm still on it. One of them said, I feel like I got scammed. They took away some of my shares. I don't know what's happening. Someone please respond. This is my 5th email. It was one of these pre-IPO things that you were talking about. Anyway, I don't think the Fed is going to dump rates back to zero. What I think they're going to do is stop. Just completely stop. And then start talking about how they'd be ready to do accommodation again and see if that's enough to stop the bleeding. So that's when I think you'll see, they're not going to do it now, but I think when we start to get more of an anticipation of that happening, that's when I think we'll get this medium-term bottom. And it won't work because I don't think they'll be able, given where inflation is, to begin QE again or to move back toward the zero boundary on the overnight Fed funds rate. So that's when I think we'll get that really steady medium-term bottom, but it's not going to work.
Do you think that, all right, they'll pause with the hikes, get 2 more 50 basis point hikes in, possibly pause. But what do you think they'll do with their quantitative tightening?
I think they'll continue to let the ones that mature roll off. So they don't currently, as far as I know, have plans to sell anything except in MBSs. They said they would sell some mortgage-backed securities, but not in treasuries.
Because a lot of their holdings are longer dated, though.
Yeah, so that's a way around it, right? That's a way around it. Is they say we're just going to let things roll off, and I think that's why they said they're going to sell the MBSs because housing was obviously strong. They shouldn't have continued to buy them in the first place. Again, so many missteps, and you have to say it has quite a bit to do with the idea that Jerome Powell hadn't been renominated yet when all this was going on. Now, all of a sudden, he's renominated, and they're going to sell some MBSs, and they're going to raise rates 50 basis points every meeting. So you figure somewhere around July is where they're likely to actually stop doing things, stop doing 50 basis point rate hikes. And we'll probably get warnings of it somewhere toward the end of May, beginning of June. We'll start to see some Fed speakers saying things about we may only have two more rate hikes, things like that. And that's when I look for the bottom, not for when they bring it back down to zero. And again, I still think it's going to be a medium term bottom. It's not going to be the one that holds.
And how long can they go for a pause? Because if inflation keeps printing 6, 7, 8%.
Well, that's just it. I mean, if you look at it from the recessionary data that I just gave you, we have to have a recession in there, and they're going to hope the recession does the work for them. So this is what I'm now thinking that their sort of under the table plan might be. If they're able to drop inflation, what was the year over year? 8.3 last? I think it was 8.3, right?
Yeah.
Okay, so if you go from 8.5, that has to take us to 6% to drop 2.5%, right? If you go from 8.3, it's 5.8%, right?
Mm-hmm.
They get there, a recession is triggered, and now they hope the recession does their work for them. That's what I think they're going to do. The issue right now is that there are so many people, the supply chain actually causes a problem for them, not just in the fact that it's helping to spike inflation past where it otherwise might have been, but also because people are lined up and waiting for things that they can't buy right now. I'll give you an example. Pulte Homes down here in Florida, somebody who was buying a home close to a friend of mine who lives in a Pulte community dropped out. They couldn't get their bank financing with the new rates. They were able to get them with the old rates. They couldn't get financing with the new rates. They never locked in. They didn't get their loan. So when it came time to get ready to close, they couldn't get their loan. They were pre-approved at old rates. So since it was really close to some friends of mine, I told a person I know at Pulte, hey, find out what they're asking for this house, right? And they came back and said it's already on reserve. I said, oh, you guys are still crazy hot with buyers. They said, no, we're only releasing 2 a month because we can't finish them. And a pool's not even an option anymore because we can't get the supplies to build a pool. So what this means is that people are waiting for things, right? They're waiting for goods and services that they can't get, which means companies won't even have an opportunity to rebuild inventories. And what people don't understand is inventories is a massive part of the GDP figures. The rebuilding of inventories pumps up GDP. So if a 2% increase in GDP was enough to satisfy the demand, normally you'd get another 2%, well, let's say another 1%, to rebuild inventories for future demand, and there's your 3% GDP. But you can't rebuild inventories. As the supply chain loosens, you're just going to be filling orders. They said they're right now placing orders for materials they think they need in December. So this actually stops us from getting out of a technical recession because you can't get GDP high enough. I don't even know if I answered your question.
Well, I was having a good day.
Sorry.
Hey, look at it, a little bit. That's still got a potential double bottom. And look at the Nasdaq. Look at this one. This one. Oh, look at this one.
Oh man, pretty.
That's so pretty. Look at it was stopping right in front of the 62.5 though. So we have some potentials, and next we got the weekly cycles at the bottom. So we could be getting into at least some kind of bottoming pattern around here. Remember potential. If I get one more person reaching out to me saying, your bullish call didn't work. Yeah, but it didn't trigger. It's got to trigger. Otherwise, the main trend's still in place.
Right?
Yes.
Trigger.
I have my new I've developed my new system. I'm just watching 2 stocks.
Oh, there you go.
When I see this kind of we got AMC going nuts today. Did you see AMC and GME?
I did see those today.
I mean, look at this bar. I mean, literally, it was back. What was the low? Low was 77.77. The high was 108.06 on GameStop. Come on. Maybe that's our soft bottom indicator. We just watch AMC and GameStop, and when they go psychotic again, hey, there we go. New system. Don't have enough data to test it on, but
Man, I swear to God, man, AMC, and I'm sure it's always been like this, and it's probably worse on Reddit, but AMC and GameStop people, they just go nuts when stuff goes up. Here we go. It's going. This reminds me of back in March. They're always, every move reminds them of another move, and they'll do comparison charts, right? They literally put them up on Twitter. Doesn't this look exactly like last October when it was ramping up? That they're always doing that. This is the one, and it's like, oh my God, it's not the one. Look at this chart.
Yeah, there were 3 halts in GameStop today.
Yeah.
I'll know the long-term bottom is in when this has become a thing of the past.
So here's something funny for you guys. And then I'm going to line you guys up and say, are there any questions for me? Because I know Mike has other stuff to get to. But so I get called by CoinDesk, which is a cryptocurrency online newspaper, right? And the reporter's name is Helene Braun. Nice person. She said, looking into the role that institutional investors play in the current crypto market crash, do you think they accelerated the crash since they're part of the reason why crypto is correlated with the stock market, which is in turn why crypto is down together with the stock market? So institutional investors in crypto, which by the way, crypto people were cheering the shit out of it when they said institutions are getting involved. It's going higher, right? And the main narrative of 2021 was celebrating institutions' arrival into crypto and crediting them for the boom. Are we now seeing the other side of the coin, so to speak? Ha, ha, ha. So that's the question I got. And I was busy, so my first response was absolutely they're part of the reason it's falling, but it's not sinister, right? And then the second thing I said, look at it this way. I just saw an article that Bill Miller, who's the Value Partners chairman and former CIO at Legg Mason, in case you guys don't know who he is, he told CNBC he sold some of his Bitcoin to raise cash to meet margin calls and other assets, right? I said, this is the nature of tradable assets. These things happen in most downturn. When assets are sold, all assets are sold. As we've talked about before, Bitcoin is correlated with the NASDAQ for quite a while now, and it's no exception. I don't understand why people in AMC, in GameStop, and in crypto don't think their assets can be sold off unless it's sinister. Unless there's some sort of an SEC investigatable, is that a word? Investigatable reason for it. Assets go up, assets go down. Our house is sinister because houses go up and houses go down. By the way, you buy a car, it always goes down, except for right now. But if you buy a car over the history of automobiles, most cars go down. Are they sinister? People got to realize things go up and things go down. And when they go down, it's not necessarily because somebody was after you. It's not because the Fed said something, or you can look at all the whys you want, but it doesn't make a bit of difference. Anyway.
What's this? Now we see the picture clearly, and we're determined to use our tools to get us back to price stability. I guess he is rambling on about stuff again. Oh, boy.
Thanks for that, Waka Waka. Now we see the picture clearly now that I'm renominated. I can see the picture clearly.
Isn't there? I can see clearly now.
Why did everybody else, including me and Mike, see the picture clearly like last June and July?
And you said, stop with this already. I don't know.
By the way, what does it matter if inflation is transitory if your mantra is price stability? If
See,
there's movement in price, that's not stability.
exactly.
Anyway,
I don't know. They don't know. Stable coins are not stable anymore. USDT next.
isn't Tether already getting hit?
Tether uncoupled for a bit today, and then there's still, you got the shenanigans. It's going to take the final market flush out, and then you will see a lot of this stuff blow up. What would Tether say today, that they can't disclose their 40 billion secretive U.S. Treasury holdings that nobody knows about, because then they'd
Did
have
they
to
actually say that?
yeah, they'd have to disclose their secret sauce.
They
Oh,
did not actually say that.
yeah.
Wow.
Yeah, because they don't have them. I'm going to make this very simple.
Wow.
You don't accumulate $40 billion worth of assets and nobody can trace it.
By the way, nobody that I talked to knows anyone that sold it to them.
Yeah. There's nobody. You could talk to the commercial, you talk to everybody out there in commercial paper and anything who deals with size, and they're like, nope, nope.
When Mike first brought it up to me, I brought it up to a friend of mine who basically funded Mitsubishi Bank. He was involved in the funding of Mitsubishi Bank. So every big deal went across his desk so that he could fund it. Nothing. He said, I'll ask around. Nobody sold them anything.
Nope.
So
And they like have 8 employees. They have 8 employees. So somebody had to
My God. Unless somebody sold them something. This is what I wanted to, like, this should be a raging investigation.
Yeah, but it's not. I mean, they're under criminal investigation, but who knows when you know when it's going to you know when everything's going to flush out once it all collapses. It's just like everything else. Until things unwind, you know, that's when they drop the hammer. Oh, well, you know, the horses out of the barn or the cows out of the pasture. Now we're going after it.
Yeah.
So, did a firm beat? I wanted to see what they were going to guide. There's your, well, you get a little bounce play. Yep, looks like they beat. So, all right, anything else we have hat tipped? Oh boy, Wavy! Now you're bringing in Ross Gerber. You don't want to get me started on Ross Gerber. Buying Unity software for around 175, writing it down, 82% puking it yesterday, watching it pop 16% today. You know,
So here's something. Let's talk about that real quick. You always hear people, like I always hear people who aren't involved in sort of inner workings of markets say things like, you know how they do it. They're trying to drive it down so they could buy it back cheaper. Well, let's ask Ross Gerber if that's what he tried to do there. Did you try and drive that down so you could buy it back cheaper?
and by the way, you still, again, once we stop getting these insane pops with these companies that can't even post earnings, then we'll be at a market bottom. You know, Unity did not change. Yeah, it was oversold, but it you know, you get these 16% moves, 20% moves, 30% GameStop move in a day. Yeah, we're not at that bottom. So, all right. Anything else, Bob?
That's all I got for you.
All right.
Question for me. I will. I'm not starting my weekend, but I sort of am.
Powell sees more pain ahead, admits soft landing is out of Fed's control.
Okay, so that Waka Waka, that's the quote of the show, the week, the day. He just basically said that a soft landing is out of the question. That's what he basically said right there. He said out of their control. We're going to crash land. That's what he thinks right now. Is that a direct quote?
We have to look that up.
If that's a quote, put the link in or something. I got to have that quote. Because if I want to translate that and paraphrase it, that just means Jerome Powell said that a soft landing is out of the question.
But, you know, he finally comes out with that. Oh, I'd have to look this up, but he finally comes out with that after he's reconfirmed.
Yep.
Today, I mean, they just confirmed him today, and he's like, soft landing. Nah, not happening. You can't make this stuff up. I mean, if you did make this stuff up, people would say, yeah, I don't believe that. I don't believe he'd actually say that on days confirmed. Uh-huh. Oh, God. Oh, boy. All right.
No, NASCAR, that's awesome, dude.
This is an admission of we are fooked. Yeah. We are fooked. So, oh, boy. All right. I'll get back to, yeah.
Mike, if Waka Waka finds a link or something, send that to me, would you please?
Soft landing may depend on factors beyond Fed control, according to he's in a marketplace interview. He was doing an interview.
Oh my God, that's the quote. That's it.
Yep. What? Powell, with perfect hindsight. Now he says, with perfect hindsight, we would have been better to have raised rates sooner. Are they? How many people were shouting for this? Like even a year ago or over the last summer, we were talking about it.
God.
With perfect hindsight, how about all the people who lived through this and said, "Why aren't you raising rates and getting rid of your quantitative easing?"
Oh my God.
Oh,
even people screaming during the housing rocket ship that they shouldn't be buying MBSs. At least that.
What?
Why are you supporting a housing market that's screaming higher? People are making 80, 90, 100% inside of 18 months on their houses. And he's buying MBSs.
Yeah.
Wow, man. That's Wavy, Waka Waka. Thank you for that. That is great stuff.
This is
Mike,
just,
send me that, please.
I just, how do we get rid of these clowns?
I don't know. That's...
You know what we should do, though? We need to pass a bill capping gas prices and everything. Dude, does nobody even you cap gas prices, people stop
demand.
If you're not going to produce it and go broke doing it, you stop making it. Then what happens? You get bigger shortages, you moronic people. Sorry.
Wow.
I'm just, oh boy.
Wavy, Mike, Waka, somebody send me where you're getting that. I'm sure I can find it, but
now we see the picture clearly, and we're determined to use our tools to get us back to price stability. What you guys you're full of crap. I also said that the process of getting inflation down to 2% will also include some pain, but ultimately the most painful thing would be if we were to fail to deal with it and inflation were to get entrenched in the economy at high levels, and we know what that's like. Isn't it some aspects already entrenched?
I'm tweeting it right now.
I mean, this is nuts. Especially on the day you get reconfirmed and now all this comes out. All right, I want them. They're all gone. Flush the whole thing down.
Wow.
Flush it down. I don't know if Link's working here. You'd have to try it, Waka Waka. This is just, I don't even know what to say. I need a drink now.
Yes, you do.
Oh, jeez.
Unbelievable.
This is...
All right, I'm going to be tweeting about this for the next 10 minutes.
Yeah, this is pure, absolute insanity.
Is the actual quote out of their control or out of the Fed's control? Just that part.
Again, we'll have to look at it, but this is, you can copy paste. This is unreal. I think there's some stuff on Zero Hedge about it, so check the Zero Hedge Twitter feed.
All right.
And they should have the perfect quotes because they generally don't get it wrong.
All right, I'll do that.
So yeah, this is insane. Talking
all right, guys.
Check on ZW futures. Let's just see the wheat futures.
Okay.
I actually have them in. Why did I even type that? I have it in my grains watch list. Oh, there it goes. The breakout move back up.
Boom. See that?
There we go. Look where we came right down to here. Look at this. For people who say this crap doesn't work. 62.5%, holding in there. Had that double bottom,
Mike, just
full target on the double bottom. What?
It's just lines and squiggles.
It's just lines and squiggles. There's no predictive ability right here. First target, pause, pulling back that 50% level, and just closing right at that final target. Now, this thing's definitely going higher, but it's going to be interesting. Tomorrow, gap fill. All right. Yeah, Zero Hedge article shows it in word-for-word interview. There you go, Bob.
Where?
On Zero, just go to Zero Hedge's website. It'll be one of their things.
Soft landing may depend on factors beyond the Fed's control.
Yeah, all right. Have we bottomed yet? We've been talking. We've got potential very short-term soft bottoming patterns in. We are screwed big time. Thank you again, Christoph, for pointing out the wheat futures for everyone. There's no inflation. It's all gone away. All right, I gotta get to some technicals real quick, and then.
All right, I'm gonna go. I'll see you guys.
All right. Hey, everybody. Mike, you are starting to sound like one of the TV guys. No, I'm making a joke because we brought that up. What was that, on Tuesday? I'm going to boot you, Wavy. That was an insult. That hurt. Don't tell me I'm like the TV guy. All right, the bigger thing would, if I sounded like Kramer, then those would be fighting words. I know you were joking, Wavy. I know. We're just having fun with that. I'm going to take out. Did you see the NASDAQ today? Remember I said watch that 50% level? That 50% level? Did you see here? I said watch that 50% level, and we pretty much ticked it right here. That 50% level, boom. Right there, I talked about that this morning, and that was key. By the way, this afternoon, you had this little mini double which ran up to target. Let me just review what I'm watching for tomorrow. Oh, by the way, I wanted to show something else. When I talk about a breakout and a retest of a pattern, whether it be a horizontal or this channel pattern, this is exactly what I'm talking about. You see this breakout and retest? That's why I wanted to leave this on here. Just as the exact kind of pattern I like for a little short-term continuation play. Right here. You see this? Breakout, retest, and then boom. For that little short. Just wanted to point that out. When I talk about breakouts and retests or breakdown and retests, just want to point that out. Here's what I'm keying off of. Let me get some of these. I got too many levels on here at this point. We did close above the 62.5 at the end of the day, so it does still favor a return to retest today's highs. Statistically, we have this potential double bottom pattern. I'd want a close above 39.6175, preferably on a 1 hour basis. Then your first target's 4,000, 40.19, and 40.38. Where would that take us in terms of the big picture? That just takes us back to the daily rotation zone. Takes us back to the daily rotation zone, out of this very oversold condition with cycles trying to turn up, and then we'd reassess once it hits the daily rotation zone. Even beyond that, on this last little down move, the next would be about 40.81 and 41.38. By the way, I want to reiterate, I'm going to point this out a few times. For next week, remember your major options expiration next week, monthly options expiration, and we have the major call gamma and put gamma, major expiration stuff right here at the 4K level. So could we see some kind of bottoming play and then stalling, moving even into the rotation zone and then stalling out, possibly going into next Friday back at that 4K level? You could very easily see it. You could very easily see it. And the pain point, I'm going to have to do some more analysis, but the pain point, I got to figure out which side of that 4,000 is the maximum pain point. NASDAQ, just pull off some levels here so we can see clearly. All right, NASDAQ, your key trigger would be, and NASDAQ did not, I believe, I had to double check that. No, NASDAQ did not close above the 62.5 yet. Again, NASDAQ not confirming this yet. So could we roll over and form a triple still on that NASDAQ? Yes, but if we don't, close above 12,132.75, 12,340, 12,340, 12,443, and those would be my preferable since this one cuts through the wicks, but it would be 12,547. I'll get to that in a second, Christoph. Just want to get through a couple things. If we did drop back down, the short things I'd be watching for tonight if we went lower would be 11,633, then 11,578. Longer if we went on if it really got tanked, which I'm not expecting, but then you see that we have a cluster here virtually at the same last level I listed, then 11,473. For the S&P, I'm just going to go 38.41 and 38.28, and then we have the 37.5% harmonic there. Dow does not have any great bottoming pattern in here at this point. So the key area I'd be watching is above about 31,870 for tomorrow. And overnight, overnight I'm still going off of 31,000. Let's see what Christoph. I scanned quickly through the sectors, and there seem to be a ton of potential reversal patterns in sectors like X. So are you talking individual stocks or the sectors themselves? You do. There's this doubles was clearly off the table, never triggered, but this one, see how that looks on the. Yeah, that one you do have. It's a little sloppy, but it is valid. You do have a potential double there. You can really see it here on this 4 hour with that clear rotation. So you do have that, and it's completely valid on the 4 hour in the XLV, XLF. Again, these don't have to, like this one. See this potential double that I went over from the sector overview? Never triggered. That's why it was a potential. XLF, I don't have any great bottoming pattern in unless there's something in stocks. You got this little 1 hour little micro one. And I don't even know if that's valid. But above here, above about 33.40, I could see it getting a little rally on. That's potential percent B daily buy signal. You like PFE. Yeah, Pfizer nearly. I like this if it gets above about 50.70 on a closing basis, because then you're into a clear path move here. And you do have a little. That's really ugly. I might use the targets on that though. You almost have a triple formed there, but I'd probably look at, and the second target's roughly in line with the end of that clear path. That 50 in the way though, and that 50 is right at here, right here. So that's where I'd want a little stronger price action for me personally. What else do we have? Crude. I was really. Well, yeah, we did. I didn't look at this late in the day. We did just eke out, so I'm watching for a continued follow-through for short-term play over the next few days in crude. Gold just, again, got slaughtered back below the 200. Again, I'm hands-off on these until we can get some bottoming patterns in here. because I want to give it room to run before another buy level kicks in. Notes, I want to touch on this. Did close above the 62.5. And also, you see the weekly, not quite to the weekly rotation zone. So I'm watching for another push higher in notes. 120.06 and then to 120.20 area. And 120.20 area would roughly reconnect it with the weekly rotation zone. Might see a little pullback then and then another push higher because we're coming out of a major weekly cycle bottom. So we could see some follow through to the upside with notes. Dollar index coming up to the next harmonic level. You can see it here. I already updated the retracement areas. Next harmonic level. Again, I'm watching for a topping pattern. Do we have one in place yet? No. Until then, it keeps running. 105.58 if it keeps on running to the upside. VIX, again, there's a little reversal back down. I'll be watching about 30.82 again. So VIX is also coming off, especially without a strong rally in the indices. VIX coming off from this elevated level, so we could, again, that's another thing reinforcing a potential short-term bottom. Your custom mega cap index finally trying to get a reversal on today. So could you get a little mega cap up play? Also, Apple I know got blistered today, but closing on up. I'm going to be watching for some continued follow through if we can get back above 146.06. Also, this could be putting in a DeMark buy signal. SI futures might very well trigger a long-term sell signal tomorrow. Well, let's check on that tomorrow afternoon. You look at Tesla yet? No, I have not. Tesla, again, trying to put it, we came back down, holding above, closed back above that 700 level. I'm just going to watch if we get the rally on tomorrow. Here's the little thing. Let me get this on here. You see, we couldn't, let me change the color. We could not get the close back below the 62.5 on the longer term basis and rotating back up. So I'm watching for some continued, if we break higher tomorrow morning, I'm watching for some continued higher price action, especially back to this top area between about 755 and 759 on a follow through. What would invalidate that for me is if we got a close back below about 709. I'm watching coming off this oversold if we did get this bottom in, and then on a continued rally through there, I'd watch for a reconnect with the rotation zone on the daily. Cycles are at a bottom or trying to bottom on the daily and on the weekly. So you are welcome, Christoph. All right. Put some of this more stuff in here. I'm running out of energy. It's gone an hour. It's been also a long day. Look at the month and put some of the stuff in tomorrow for tomorrow, Waka Waka, and we can take a look at some of the bigger perspective after we get through this week's trading. Can I check the 6,900 gap? In what? NASDAQ? Where's your 6,900 gap? I know you've talked about that before. You mean, which gap are you talking about? Yeah, I'm trying to spot your, so close there, open there. I mean, you have a slight little gap there that was not technically not filled. Very slight. What are you talking about? That as a long-term price target? That would be, oh, would that be painful? So that's the only thing. There was a very minor gap there. Could it fill? Yeah. We're a long way off from that, though. All right, I'm going to wrap this up. Again, I'll be here tomorrow morning at 8 a.m. Central so we can digest the overnight price action, see if any of these patterns are still in place for tomorrow's open, and figure out how to trade tomorrow and wrap up the week. So until then, I will talk to everyone later. Have a great trading night. Bye, or a great rest of your night, and a great trading day tomorrow. Should you not be able to join the live stream. Now, knowing what JPal said, would you think the market will dump now? I mean, we'll find out how it opens in 30 minutes. I don't know if we're going to get a dump now. Again, we're really trying to put in some bottom. Could we retest the lows from today? Yeah, and then we could invalidate some patterns, and then we could go lower tomorrow. I don't know if we'll go into full blown dump mode. With that, I will talk to everyone later.